169 million ounces of silver just vanished from public records. And JPMorgan isn't saying a word about it. Across 5 continents, industrial factories are making a discovery. Their silver orders cannot be filled anymore. Solar manufacturers in China, EV producers in Germany, semiconductor plants in Taiwan, all competing for the same supply. Meanwhile, the largest custodian in America is quietly moving metal, moving it into categories the public cannot touch or access. This is not speculation. This is happening in vault data right now. Every time banks have hidden silver like this, catastrophe followed. 2011, 2020, 2023. The pattern repeats. And here's what they're not telling you about the real numbers. The industrial world needs 1.3 billion ounces this year, but mines only produce 820 million ounces annually. The math doesn't work anymore. The system is running on borrowed time. Let me show you why JPMorgan is preparing for the moment, when the world realizes there isn't enough silver for everyone. Something is happening inside JPMorgan's silver vaults right now. Over the past several months, the bank has been moving quantities, massive quantities of physical silver between vault categories, in ways that don't match normal market behavior or patterns. Registered inventories, the metal available for immediate delivery, have been reclassified as eligible, metal that cannot be delivered. Large blocks of silver are disappearing from public reporting, and JPMorgan, the largest silver custodian in the United States, has offered zero explanation to the public or regulators. This is documented vault data showing deliberate repositioning. According to COMEX reports, JPMorgan controls 112.5 million ounces, representing 53% of all COMEX vault holdings nationwide. That's more silver than the Hunt brothers accumulated in 1980, more than Warren Buffett held through Berkshire Hathaway. But this is happening silently, systematically, without fanfare. The pattern is clear when you examine vault transfer records. Large transfers from registered to eligible status repeatedly, reducing deliverable supply while keeping metal within vault walls. In just 3 days during June 2023, something dramatic happened. Nearly 6.5 million ounces moved from registered to eligible. By August, registered silver fell from 30 million to 23 million, the lowest level in 15 years of COMEX vault history. As of early 2025, registered silver stands at 73 million ounces, but eligible holdings have surged to over 265 million ounces. The vaults appear full, but deliverable supply is critically thin. Analysts calculate only 50% of eligible silver is available. That means true deliverable supply may be only 200 million ounces, not 340 million as officially reported to the market. Meanwhile, there are over 170,000 open silver contracts on COMEX, representing potential demand for 850 million ounces of metal. The ratio of paper claims to physical silver now stands at approximately 28:1, an extremely dangerous ratio. If just 3.5% of contract holders demand physical delivery, the system cannot fulfill those orders. It doesn't exist. And here's where it gets worse for industrial buyers. According to the Silver Institute, demand reached 1.2 billion ounces in 2024, an all-time high in global silver consumption, with industrial fabrication hitting 680 million ounces consumed. That's 59% of total demand from industries that need silver. Solar manufacturing alone consumed 232 million ounces in 2024, up from just 60 million in 2015, nearly quadrupling demand. The solar sector is projected to reach 261 million in 2025. New technologies like TOPCon require 1.5 to 2 times more silver than older PERC cells used in previous generation panels. China announced a $10 billion subsidy for solar makers, boosting consumption by approximately 5% over 12 months. The EU targets 700 gigawatts of solar capacity by 2030. Electric vehicles are another massive consumption driver now. Each EV requiring 25 to 50 grams of silver per vehicle. That's 67% to 79% more than traditional combustion vehicles. Global EV sales exceeded 17 million units in 2024 alone, and that number continues accelerating year after year. By 2035, every other car sold will be electric globally. Automotive demand is forecast to grow at 3.4% annually. With EVs becoming the primary silver consumer by 2027, add the expansion of AI data centers requiring silver for thermal and electrical conductivity in processing systems, IT power capacity increased 53 times since 2000, from 0.93 gigawatts to nearly 50 gigawatts in 2025. These applications require permanent consumption of silver. That silver is never recycled back into investment markets. And here's the structural problem with supply-side economics. 72% of silver production comes as a mining byproduct from copper, lead, zinc, and gold operations primarily. This creates an inelastic supply response to price signals. Silver supply cannot respond quickly to price increases. Production depends on demand for completely different metals. In 2024, mine production increased by just 0.9% total, reaching 820 million ounces, still grossly insufficient. The deficit reached 265 million ounces for 2024, the second largest deficit in more than 20 years. This marks 8 consecutive years of structural deficits. Now connect this to JPMorgan's specific behavior patterns. The bank began accumulating aggressively after 2011, after getting caught during the 2011 price spike event. JPMorgan held a massive paper short with no physical backing and appeared to be among the commercials squeezed during that rally. Within months, they received rapid approval for a COMEX vault. Between 2015 and 2016, they stopped delivery on 10,541 contracts, representing 52.7 million ounces of accumulated silver. By 2017, they had amassed 100 to 200 million ounces total. But starting late 2024, something changed in their strategy. Instead of accumulating, they began restricting supply access. Metal moved from registered to eligible in massive quantities. Retail dealers reported unprecedented physical tightness everywhere. In October 2025, a buyer placed an order for 1,000 tons, nearly half the world's annual production in one transaction. The order shocked the London market and triggered panic. This caused London lease rates to explode from 0.25% to 200%. The Swiss refiner Metalor announced it would not return. Until January 2026 at the earliest, unprecedented. JPMorgan had to lease 4,000 tons from ICBC, the world's largest Chinese bank, to meet obligations. This silver came from Chinese vaults in London, not Shanghai, indicating severe physical tightness in Western markets. The LBMA reported 844 million ounces in October 2025, but 551 million backs ETFs and is not freely available, leaving only 276 million ounces afloat in London. With no transparency on actual availability under stress, no one knows how much is truly available for delivery. LBMA inventories have been falling for 10 straight months, declining 4.93% in September 2024 alone. This pattern has happened before in market history, and every time a major price event followed after. In 2011, registered silver fell before spiking to $50. In 2020, inventories surged, then bled out after COVID. setting up the 2023 supply crunch that caught traders. Now, in late 2024 and early 2025, it's happening again. The same pattern at a much larger scale than before. The difference: industrial demand is permanent and growing, not cyclical or dependent on investment sentiment. Solar manufacturers cannot stop production for any reason. EV factories cannot halt assembly without massive losses. Semiconductor plants cannot pause operations ever. These industries require continuous silver supply daily, and if supply disappears, they face production shutdowns. What happens when buyers realize the market can't deliver? They panic buy at any price point available immediately. They secure multi-year contracts to lock in supply permanently. They will pay premiums of 20%, 30%, even 50% above spot. This is survival buying from industries worth trillions. Once industrial panic sets in, investor demand follows, creating a feedback loop overwhelming deliverable supply. The banks know this. They've modeled the scenario. That's why JPMorgan moves silver out of deliverable status. That's why inventories are being reclassified systematically, preparing for when physical availability collapses completely. Reports indicate JPMorgan unwound its 200 million ounce short and flipped net long by 750 million ounces total. If accurate, this represents the largest directional shift in market history ever recorded. The bank that suppressed prices through paper contracts, through decades of manipulation and derivative positions, now positions itself to profit from the supply shock coming. Analysts project silver could reach $38 to $45 per ounce in 2025. But that assumes orderly market conditions continue. It assumes no panic, no delivery failures, no industrial crisis. But those assumptions are increasingly unrealistic given the data. If delivery failures occur at major exchanges like COMEX, if COMEX cannot fulfill contract obligations, if London vaults run critically low on metal, the repricing will not be orderly at all. It will be abrupt, disruptive, and permanent. Once industries lose confidence in paper markets, they will only trust physical possession directly. This is what JPMorgan prepares for behind doors. Why silver is disappearing from public reporting. Why the bank repositions ahead of global realization. There isn't enough silver to meet all demands coming. Not for investors, not for industry, not for the system. The supply deficit is real, structural, and accelerating. When that reality breaks into public consciousness finally, the scramble will make 2011 look tiny in comparison. The question is not whether this crisis happens. The data shows it's already unfolding right now. The question is whether you're positioned before the market understands what JPMorgan knows. Once the world realizes the largest bank in America has been hiding silver without explanation for months of deliberate silence and systematic repositioning, the explanation becomes unavoidable and impossible to deny. They saw this coming, prepared, and did it silently.